I'm not leaving. I'm not leaving. I'm not leaving. The show goes on.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks closed lower on Thursday as President Trump's tariffs officially go into effect despite blockbuster earnings from Meta and Microsoft. And stocks were actually very bifurcated. We had a couple of earnings winners. Like I said, Meta, Microsoft up 11.25% and 3.95%. But Meta couldn't help the communications sector, which was still down very heavily. And same here with Microsoft. It couldn't help the broader infrastructure and hardware part of the market. Semiconductors really taking it on the chin right here. Probably has to do with tariffs. It probably has to do with some form of a rotation. Very weird, because Microsoft upped their CapEx spending. Same with Meta. And to actually see this move right here, things are probably getting a bit frothy in this market. Software took it on the chin. Financials took it on the chin. Healthcare was a proper dumpster fire today. Everything was actually really red across the board. Guys, the only green sectors were defensive sectors. Now, excluding XLC because of Meta's performance in that sector, utilities were up in a very big way. They were the best performing sector right here. And gold, right? These are safe haven or defensive assets when you look at it in aggregate. Every other sector fell. The S&P 500 down 0.33%. What we really saw today, it just felt like a liquidation coming out of the market after some of the economic data and tariff news that we got today, and we'll talk about it. You can see every single factor and size segment was down, led by selling here in large cap value, large cap core, as well as small cap growth. These were all down in excess of 1%. Mid caps outperforming, but still red on the day net. And I think a lot of the selling stemmed from the economic data that we actually got. This is very interesting. Now, if you look at initial jobless claims that beat expectations, 218,000 versus 224,000. Then you look at the inflation data that we got. Personal income up 0.3 and personal spending up 0.3 versus 0.2 and 0.4%. So we beat here on personal income. That's solid, but spending came in a little bit soft. However, the big market mover was actually the PCE price index, or pretty much PCE inflation. That came in at 2.6%. The market was expecting 2.5%. So we came in a little bit hotter than expected. However, the core figure right here, core PCE, came in at the market's expectation. So 0.3% versus the consensus of 0.3. So core was right on target. Headline figures were a bit hotter than expected. And that is why we actually saw a lot of the movement in the equity markets. Hotter than expected inflation means we need to hold rates steady where they are for a lot longer. And that one-time inflation bump from tariffs could actually materialize into inflation over the next couple of months. And I don't think the market has priced that in fully. And that is what we saw today. A little bit of a pullback with regards to the inflation data. We also got a lot of trade news. It's officially August 1st. This was the tariff deadline. Now, we got a really good trade deal from South Korea. South Korea will be tariffed at 15%. The US won't have any tariffs. $350 billion in investments will be made into the US at Trump's discretion. And South Korea will also buy $100 billion in US natural gas. That is the agreement with South Korea. A great agreement. However, there's still a lot on the table. Trump is going to sign an executive order either later today or early tomorrow, laying out sweeping tariffs on a number of countries, especially for those that haven't worked out a trade deal by August 1st. Furthermore, Trump also said on Thursday that he would give Mexico more time to seal a deal. I believe he's looking at 90 days. After a phone call with the Mexican president, Claudia, that surname, Trump wrote in a social media post that he agreed to extend for 90 days the existing tariffs on Mexican goods. He said a 25% fentanyl tariff and a 25% tariff on cars and a 50% tariff on steel, aluminium, and copper would remain in place. Most tariffs exclude Mexican exports that comply with the USMCA rules. So essentially, Mexico have another 90 days to do what they do. And that is absolutely essential because Mexico is a massive, massive trading partner. And then with regards to China, Scott Bessent came out and said negotiations are China at a point where both sides have the makings of a deal, but he didn't give any details. However, China actually have until August 12th to come to an agreement with the deal. So it looks like we are going to get a China deal sooner than later. A Mexico deal is going to be later rather than sooner. But tariffs and trade deals are no longer a big issue. We got to deal with the EU. We got to deal with the UK. We got to deal with Japan. A deal with China is underway. So all of that. Those are the big trading partners. Those are the big market movers. We just got to hope that the China deal is good. That could boost sentiment, but we'll see what that likely materializes. Now, looking at some other market movers today, Figma IPO'd at about, what was it, $28 a share. The stock was up 250% today, finishing at $115. It's actually up 7% here. In the after hours, the IPO price was $33. It was briefly halted 9 seconds after starting trading due to volatility. Absolutely crazy. The IPO market is alive and well. So a couple of other market movers, Robinhood down 3.69%, and it reported earnings. It beat on the top line, beat on the bottom line. It actually raised its guidance ever so slightly, but Robinhood at $106 per share is definitely not a buy, especially when you look at the consensus 5-year revenue growth projections of 11%, the stock trading 44 times. Pretty much in the last 3 months, the stock is up like 300%. Robinhood has brought forward 5 years worth of returns in 3 months. I love the business, not the price. Another market mover today was Meta, up 10% here. Absolutely crazy, guys. And Meta beat on the top line and the bottom line by a significant margin, increased guidance in a very significant way. It was an absolutely stellar earnings report. It really goes to show that AI is benefiting this business in a massive, massive way. And if you want the full breakdown on Meta's earnings as well as Robinhood, on my second YouTube channel, I have videos for both of these breaking down everything, so you guys can go ahead and check it out. We also broke down PayPal's earnings, waste management this week, and we have a couple of other names, Google, Yahoo, and Netflix. So go ahead, check that out on the second channel. Microsoft also reported earnings very similar to Meta, beat on the top line, beat on the bottom line, increased CapEx, AI benefiting this business. We saw growth acceleration in all of its business lines, up 4%, but at one point it was up nearly 8%. And I do think, these earnings results are really going to help these mega caps move forward. However, Amazon, not the same with their earnings. They reported after the bell. The stock was down 2.7% and down about 3% here in the after hours, even after reporting a strong EPS beat and a modest revenue surprise. Guidance came in better than expected. The street was expecting 173 billion at the midpoint. Amazon came out and said they're looking for 177. However, it wasn't enough simply because AWS saw operating margins compress a lot. Operating margins were at 32.9% versus 35% last year and 39% last quarter. However, they did beat on their revenue estimates of $30 billion. Free cash flow did fall significantly thanks to all of the major CapEx investments from Amazon. And that is part of the reason why the stock was down 2.7% and 3% here in the after hours. A good report when it comes to like revenue, but the company really struggled with profitability this quarter. Apple was up 1.18%, and I think it's actually even higher now in the after hours, right? Apple beat both the revenue and EPS estimates for the second quarter. Total revenue was up 10% on a year-over-year basis, fueled by strong iPhone performance. Guys, iPhone sales surged to 44 billion versus 40 billion, the consensus, so it beat by a lot, and iPhone sales grew 13.4% on the quarter. Service revenue grew 13.2% on the quarter. China sales were flat, and all around, it was actually just a solid quarter. It looks like we have a minor iPhone upgrade cycle underway, and I think what people are really doing is rushing to buy iPhones ahead of tariffs, and I think that actually might continue into the third quarter. Apple also came out and said a lot of things about AI, and they're looking at AI acquisitions. So I think they're preparing the market for some acquisition of, I don't know, maybe Perplexity, maybe Claude, I don't know, but they definitely will be making a lot of AI acquisitions, I think, in the next 6 to 12 months. But a great quarter nonetheless, and this should help sentiment overall. And then a couple of other market movers. CoreWeave was up 10% today along with Applied Digital. CoreWeave was moving in a big way because it exercised a lease option with Applied Digital for an additional 150 megawatts of AI compute. And a third lease agreement is currently being finalized with roughly the same terms. And CoreWeave also ripping on the back of increased capital expenditures from Microsoft, and that's always going to flow into CoreWeave. So a boon right there. I think CoreWeave definitely goes higher. Maybe we've seen a bottom, but my fair value for CoreWeave is $124. And then for everything we saw today, there were 2,200 advances, 4,100 decliners. We saw net outflows in the Nasdaq and the New York Stock Exchange, and market momentum continues to teeter. We lost the 200-day, we lost the 5-day and 20-day. We need to retake some of these averages, which starts with the 5-day for momentum to continue. But it does look like the market wants to take a breath. So I do anticipate that we probably are going to lose some of these moving averages here into August and September. I am looking for a garden variety pullback anywhere from 5 to 7%. You guys know this, as much as 10% over the next 4 to 8 weeks, guys. But let's talk about it on the charts. Now, guys, looking at the charts, you could see a fairly red day across the board from the S&P 500 to the Nasdaq 100, the RSP, the RTY. The mega caps did outperform, relatively speaking, thanks to Meta and Microsoft. But all in all, I mean, this price action looks very, very toppy, if you ask me. However, we did see some positive momentum. Apple in the after hours up 2.32%, as you can see right here. So the market really liking their earnings. Growth reinvigorated, but we'll see if it's just a 1 quarter issue, maybe 2 quarters, or if this upgrade cycle will continue for the rest of 2025, potentially into 2026. I don't think so, but growth is back. Double-digit growth is back for Apple. And then when you look at Amazon, right, you could see that Amazon is down 7.6% in the after hours. You know, the stock was up at 1.2%. And then the earnings fall started and the stock just plummeted. Yeah, those AWS margins really weighing on the price right now. So very mixed earnings in the after hours. There was a couple of other market movers. For example, Reddit, I believe, was up in a very big way. Up, 16% here in the after hours after being up 7% today. So, really making big moves right there. Coinbase reported earnings after the bell as well. Coinbase down 7.95%. And then MasterCard reported earnings before the open, and it was up 1.32% today. So, there's a lot of market movers. If you're missing earnings, your stock is getting sold off. And if you're beating, the upside is fairly modest. It reminds me of just really top-ish price action at these highs right here. And I do think we need some form of a breather. And I am expecting that into August and September. I'm looking for some form of a pullback, 5-7, potentially as much as 10%. So yeah, we are starting to see that. Now, a good way to hedge your portfolio, guys, in times like this is you could just go out and buy a put, right? Roll it out to maybe like November. And that should give you some downside protection if markets do go ahead and pull back. But you can see here that growth outperformed value today, but both in the red. Futures kind of looking a little bit green, teetering, as you can see right here. And again, the market just reacting to a lot of earnings we got from Apple, Amazon, etc. The RTY actually a little bit bullish, up 0.17%. European stocks fell, Middle Eastern stocks fell, Chinese stocks were fairly bullish. And you can see the clear risk off sentiment we got from Bitcoin and Ethereum right there. And again, even crypto is not susceptible to pullbacks. Volatility ticked up in a very big way, both front month VIX and spot VIX. And then on the back of the hotter than expected inflation, yields actually rose, right? You could see a 2-year, 10-year, and 30-year yield. That is why yields rose. The dollar at 100. We're nearing our near-term target of 101 in the DXY. That was up 0.14%. And then you could see a TLT was flat today. Gold was flat today. Silver was flat today. Actually, this might be the new day. Let's have a look. So gold was actually up 0.43% today. So that's just the new futures open. And then silver was actually down at 1.14%. But let's actually go ahead and talk about the S&P 500. Now, the month has officially ended, right? This is the last trading day of the month of July. Tomorrow we open up the month of August. And if we actually just go to the SPY, right, the S&P 500, the actual ETF, this is what the monthly chart looks like. So when you look at this monthly chart, right, the very first thing you want to see is that we are in a very, very bullish trend, making higher highs, as you can see right here, and an all-time closing monthly high. Despite what we're seeing right now, that's a monthly all-time closing high. Very, very bullish. And you can see here, we're also making higher lows along the way. A very, very ominous candle right here, thanks to the tariff tantrum. But we've paired all of those losses and some, making new all-time highs of the S&P 500. The trend is clearly to the upside. And ultimately, if you want to buy dips, you want to sort of look at areas of very, very strong support. And that first area is right here, right? If we pull back this zone right here in the S&P 500 on the monthly chart, that would be a real good indicator to buy. The next zone would probably be right here at the 560 level. Now, looking at the weekly chart, things also look constructively bullish. You can see we're very clearly in an uptrend. However, you can see a bit more information that on the week, things are not looking too good, despite coming off 1, 2, 3, 4, 5 green weeks in a row. It's been a strong move here for the S&P 500 off these lows. And then on the daily chart, this is where things is starting to unravel. Zooming in, we can see a bearish engulfing candle right here for the S&P 500. We actually got one of these in the Nasdaq 100 a couple of days ago or sometime last week. So you can see right here, that's a bearish engulfing candle, right? But we actually got one right here as well a couple of days ago, not a couple of weeks ago, just 2 trading days ago. We got a bearish engulfing candle in the Nasdaq 100. And then in the S&P 500, we got one today. Often this is a signal that we have, reached the top near term, and you can see the price action looks very, very heavy at the top end of this range right here. If we also go ahead and add something like an RSI, and you can see that we are still in this overvalued territory right here for the RSI. Let's go ahead and close that. We are still in overvalued territory, and even on the weekly chart, we're approaching the high end of the range in this indicator. So this is all telling us that we probably are going to see, some form of a pullback. Again, it's going to be garden variety, and I think we can go probably as low as this 6,000 area. We might have like minor price discovery below that, but I'm thinking anything from like a 7 to 10% pullback, peak to trough. If you go right here, peak to trough, you're looking at a 5.86% return. And then if we go all the way to the 6,000 level, which is right about there, you're looking at about a 6% pullback. Then if you look at the last area of support, which would be right around this area right here, you then be looking at 7 or 8% pullback from there. And again, just an opportunity to simply buy the dip. However, it does get problematic if we start approaching, the 5,700 area. That's where things can get really crazy, especially if the macro doesn't hold up, when we start to see inflation hurting certain parts of the economy, impacting prices and the consumer, if we see labor market deterioration. So in the month of August and September, we've pretty much had the big earnings behind us. What we really want to focus now is the macro and the inflation data and how that pertains to tariffs, because that's going to dictate if we pull back and bottom or if we go lower. Ultimately, I am looking for a garden variety pullback right now. The macro is signaling that stocks generally will go higher, but not without some volatility. And it's exactly the same with the Nasdaq 100. We're looking for some minor relief here in this August and September period. And that's just to work off some of this overbought sentiment at these highs right here. And for us to form a very, very solid foundation, maybe at these lows, for us to then make the next move to the upside, especially as we enter 2026. And that's going to be across all of the indices. The RSP as well, we're looking for some form of move back to this area of support, the RTY as well, the Russell 2000, just all across the board. Crypto also looks like it wants to move lower, so we may actually diverge from M2 money supply here in Bitcoin. You could see that we are at the low end of the range. Ultimately, if you're a Bitcoin maxi and you think we're going higher, this is sort of where you want to buy. You could see that the bulls did come in a very big way. However, there's a ton of support, which is not too far on the way down when it comes to Bitcoin. You can see like 6% pullback, and then you're in this heavy volume area here for support. Ethereum looks a bit more ominous. You can see we're at this very, very heavy resistance zone at the top here. If you just go to the weekly chart, we use this as resistance on multiple occasions. Back to the daily chart, and the bears are holding it solidly. We did put in a low right. Yeah, this does look like a higher low if we go ahead and continue to move higher. However, yeah, not looking good, right? Ultimately, the bears want to move into the zone right here. I guess it could be constructed if you say we just consolidate here for a while and then make the next move up. Either way, crypto looking a bit ominous, equities looking a bit ominous. You can see that we are falling here into the after hours, and I do think we're going to just see pullback in equities after a 28-30% run off the lows in the S&P 500 and the Nasdaq 100, and that's going to coincide with a stronger dollar, yields moving high, especially after this inflation data. And again, obviously tomorrow, if the NFP comes in a little bit weaker than expected, you could further see some movement in equities. But there is some good points to take note. Apple's earnings were great, Microsoft earnings were great. That probably means Nvidia's earnings were great, Meta's earnings were just spectacular. So these big tech names, right, if we do get a pullback in them, stuff like Meta, if we do get a pullback in Meta, right, ultimately you want to buy the dip. If we, let's say, get a pullback here to the $707 area for Meta, buy that dip, because I do think we probably go to the $900 region for Meta and higher. Very similar situation with Microsoft, right? So quite the gap up. Now sellers did come in, but look, if we get a pullback, again to this 512 area, you'd want to be a buyer of Microsoft right there, because you probably will go higher into the end of the year. These earnings from these companies were absolutely spectacular. I mean, even Amazon, right? The Amazon is down, 6% yearly after hours, but AWS still grew 30% year over year. That's absolutely massive. Yes, margins did compress. These cloud and compute providers are still growing in a very, very big way. It's just time for a little bit of a breather, form a foundation to make our next move higher. Diving into sentiment, this is the III sentiment survey, which shows bullish sentiment holding near the 40% level through July, while sentiment peaked here mid-month at about 39% and has since eased to the 33% level. This shift hints at a typical August to September pullback as investors grow increasingly optimistic, as you can see right here. Oftentimes, when we do get to this 40% level, we see bullish sentiment pull back, bearish sentiment tick up, right? So this is a little bit of a reason to get cautious. Nonetheless, sentiment is bullish, sentiment is strong and above average, and the broader tone remains that you want to be constructively bullish into the end of the year, and any pullbacks that we do get will be shallow and met with dip buying rather than panic. So if we do get, let's say, a re-rating in sentiment similar to what we saw right here and right here when the markets did sort of wobble, buy those dips, because ultimately the fundamental case remains next 12-month forward earnings continues to make new all-time highs, guys. And as long as this continues, stocks will move to the upside. And the macro continues to confirm what we've been saying on this channel for the better part of 6 months. Growth is solid. GDP, the advanced estimate came out yesterday at 3%. We were looking for a 2.5% figure, well above estimates. The economy is chugging along very, very nicely. Economists were way too hawkish, and here we are. At the same time, the labor market continues to be strong. Private payrolls, ADP printed 104,000. The consensus estimate was for a 75,000 figure. So we smashed these estimates, and there was some commentary from the ADP team. They said, our hiring and payout data are broadly indicative of a healthy economy. Employers have grown more optimistic that consumers, backbone of the economy, will remain resilient. And when we look at consumer pay, you can see the job stayers saw an average increase of 4.4%, job changes 7%. So income metrics also looking very strong, and this all bodes well for NFP coming this Friday. Furthermore, to add why I think NFP is going to have a blowout number. When you look at federal employment tax receipts, 7.4% through the 25th of July, I think the NFP number is going to come in a lot better than expected. The expectation for that tomorrow is 110 for the forecast. I think we're going to come above this number right here. The unemployment to stay at about the 4.1% mark. That's what I'm predicting. And then we also get manufacturing PMIs. I could be wrong, don't get me wrong, but the data, at least everything we're piling together, is telling us that we should see a blowout non-farms quarter. Looking at earnings for the rest of the week, everything's coming to a close. We've had a blockbuster week of earnings, but tomorrow we have Chevron, we also have Exxon, Moderna, and then Colgate is reporting. So we do have some actually notable names in the energy, healthcare, and staple space. So sort of like that broad market economy is doing a lot of reporting tomorrow. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.